we also have the numbers coming in from Hindalco. The numbers seems out to be good, and the stock is also seeing a good jump up, because today the company did had a bit of a, rather the stock price did had a bit of a nervous opening for itself on the back of the Novelis print as well. But along with that, some of these stocks like Astral, that counter has been lagging behind since the start of the day. Along with that, Praj Industry, no significant recovery from the day's lowest point as well. So yes, of course, the earnings are definitely the key to watch out for in today's trading session. And let's put the spotlight on Hindalco. The company did come out with its numbers. We have seen an improvement in the margins as well, but how are the other internals looking like? Firstly, let's go across to Ashesha to know the fine print. Ashesha.
Well, yes, Hindalco has reported better than expected set of numbers. It's better than what the consensus estimate was. Revenue has seen a decline of a marginal 3.5% on a sequential basis, but margins have expanded by about 100 basis points. Margins have come in at 12.9% versus 11.9% that the company had reported in the previous quarter. Now, as far as segment-wise performance is concerned, aluminium upstream quarterly EBITDA has risen by about 17% YOY. We have EBITDA per ton for aluminium upstream business that has risen by about 15% on a year-on-year basis. Copper EBITDA has also come in largely in line with what the street was working with. Now, as you mentioned, Novelis, that one reported its numbers yesterday, and Novelis contributes nearly 60 to 70% of the total revenue, and that chunk was already reported. So we will not see any kind of reaction basis the standalone numbers, but yes, largely better than what the street was working with.
Okay, so better than what the street was working with is the outcome on Hindalco. Ashesha, thanks so much for that. Let's get a better sense on what to make of these numbers. We have Aditya Velekar, Senior Research Analyst of Metals and Power from Axis Securities, joining us on the phone line. Aditya, hi, good afternoon, and thanks for your time. Right off the bat, what are Hindalco's numbers looking like? My colleague Ashesha was flagging off. It seems like a good set of numbers, and margin expansion of about 100 bips is what we've seen. What's your first take here?
Yeah, good afternoon. Yeah, definitely the numbers are better than what we were expecting. Both the upstream aluminium and the downstream aluminium EBITDA per ton, those have stood resilient. One point which we can see is that the net debt has declined quarter on quarter by 3%, and net debt to EBITDA is at 1.02 versus 1.0x in the previous quarter. So that is also slightly reassuring, because in yesterday's post Novelis results, the net debt at Novelis has peaked at 3.2x. So the strength at the Indian operations is basically offsetting the weakness at Novelis.
So the strength in India is actually offsetting the kind of underperformance we are seeing in the Novelis business. Hi Aditya, but what exactly in the management commentary will you be looking forward to when it comes to the earnings con call?
Yeah, so today's focus will be on the upstream aluminium and copper segment, how they give the progress on their expansion projects with respect to their smelter, both copper smelter and aluminium smelter, and the 850 KTPA alumina refinery. So also the cost of aluminium production in Q2 and backward coal integration with respect to coal mines. These will be the key monitorables from today's call.
Okay, so all eyes are going to be on the management commentary when it comes to the con call. Aditya, we've spoken about aluminium upstream quarterly EBITDA. Let's talk about the copper EBITDA as well. It seems like it's in line with the guidance that the company had given at 673 crores, but it's still down almost 16.5% on a year-on-year basis. What are you making of this metric?
Yeah, on copper segment, they have consistently guided at EBITDA of rupees 600 crores per quarter. The decline on a year-on-year basis might be due to the fall in the TCRC, because TCRC on a spot basis have come down significantly, but Hindalco has a strong downstream portfolio with respect to copper, so that is offsetting that. Also, they have long-term contracts with respect to TCRC, so that is protecting their downside. And if you see on a sequential basis, the division has done well by 10%. The EBITDA is up. So going forward, we have to see how much they guide, whether the decline in the TCRC on a spot market impacts their guidance going forward. So that will be one of the key monitorables.